Guys, I hope you're all doing well. So today is the pretty much end of the week for trading, and we reached to 31st of January. We're going to enter February quite soon, so hopefully price action plays a lot better. I mean, if anyone will say, was the price action quite challenging? I would say, yeah, this week has been quite challenging. Nothing is that pretty, and all the other price when it's moving bearish, etc., doesn't kind of look like it's respecting any deep price action. But from this reversal point, let's talk about this reversal point. It's from a monthly sort perspective here. We swept the low, and in a way we were tracing and let you know the structure on DT Forex. This here is a DT Forex high break structure. So we did break like a mini structural point, like you can see on if you Sam the indicator, he says there's a breaker structure, but it's not surely a breaker structure on the DT Forex because we look at per breaker structure, and that in itself the structural is a high. So say for example we have a breaker structure here, but it's only liquidity graph. So we got this breaker structure and price still respected that high is in the midpoint of this area. So when I'm using my strategy to approach, when I use my supply and demand, my version of it, I see that price has this weekly limit. As in, if we go on weekly, we can see that price already reacted to weekly CB. Then the product they produce formed a bearish order block. The price has respected the bearish order block, continuing downward, but it's only this week. We will see whether the price will truly hold or not until we see more further price action. But this time being on the higher time frame, we're looking to go bearish. However, it's a little bit tricky to me when I'm looking at prices, and economically, can price really go this deep? Let's look at how the technical analysis the chart presents us. So basically on daily, we don't have any more busy in CB. This day on Friday has closed up the CB, reacted to the old block still, and continued bearish. So say this here is a proportion block. I don't know how RCT does it, but there's an old block, say for example, price didn't display side. It's better to look at this whole price section, then we can look at the price from the original price. So as price enters this area is like a weekly zone. And then we know from our left hand side we got a lot of liquidity sitting there. So what was price doing? Eventually we saw a lot of liquidity on Friday. We went into a particular zone for 4 hours. That was never reacted. So that's why price plummeted lower. At the same time, price never punched through the 30% of the zone of that bearish structure that the DD Forex has marked. So then, in that reference, the duration is held. And also, when price mitigate here, look at our choke and break structure. The all blocks will never react the same here. Say for example, we had an all block here, because this whole candle encased everything. So we have a below all block that displays. Say for example, that's how we look at the all blocks. The bearish all blocks break the same mitigation. So everything in terms of just doing the ICT way has been mitigated. So the delivery of the all blocks has been completed in terms of the bullish price action. So now price is going to slowly take all of these structures out while giving out a bit of retracement ideas. So you can see, obviously, you got the busy reaction. A lot of candles sitting within this busy with 50% respected. But all these wicks here, I've done the other video previously that this here, the second candle rejection, and then price came back. What did it do? It reacted off a 1 hour busy sitting here. This is why the 1 hour busy no longer holds when, of course, we swept that level there. That there is a swing low on the 4 hour. So we'll continue looking to challenge this area to see whether this all block will hold or not. Because when we look at the price, this here is a breaker structure. This here is another breaker structure, for example, saying here. All of these mitigations already occurred, so the price likely to offer retracement, but not do a lot. Because price wasn't actually, so this one this high, it wasn't reacting to this area, it was more reacting to the inner range to take internal range because this does not establish as a real structure. Say for example, we got breaker structure from, because the thing is that the breaker structure really happened. This just week, the breaker structure, this is low. This is the actual structure of 4 hour. These aren't structures of 4 hours. These are just inner structures, inner mini structures. So they're not actually breaking the major structure. See, this is a structure high, it didn't break. So then by that definition using ICT is that we got this structure that's never been broken. What could happen is that we could have a liquidity graph. Yes, we could have a liquidity graph in order to go higher if that's what price wants to do. But at the end of the day, on 4 hour, it closes. If it fully closes, we're looking at for changing character to continue bearish. But in my opinion, is that okay? I'm kind of expecting price to enter a weekly zone. For example, this here is the next 4 hour DT Forex effective zone. The price is kind of like a first tap in the ICT concept. DT Forex is that I have my effective zone here. You might as well dance it to give me a reaction, but ICT likes to do this thing. Sorry, DT Forex likes to do this thing. He likes to trade from the right hand side, not from the left hand side. So we trade range by range, and that's exactly what I did for the intraday price action. Okay, let's look at how we can explore our ideas. But obviously we have liquidity here. You see, we have a severe reaction here. This here is from the equal high correction of price to go to what? To go to inefficiency or liquidity, because this here is a high low candle. We kind of react off the high low candle to take the equal high, because this here, it didn't create much of a CB, except it did create CB, but more like the delivery price action, which price didn't hold. Its body closure over 50%, it checked higher. But this here was hard to trade because price didn't check higher straight away. It retraced the low to take that low, then retrace, then return to take this liquidity. Say this here is ICT block by block. This here the reactor of a 4-hour ICT block. So that's how people market and how people trade off it, changing character and trade down. But we can use that idea later because this is late New York, so I didn't really expect much. But to me, it actually hit a 4-hour supply zone, so which does make sense to trade because prices attracted from buyers to sellers, sellers to buyers. And this here using ICT all block concept, just trading off this all block is valid. Friday high wasn't fully broken, so we've got a couple of BPR sitting here that price rejected. There's just a momentum wick here, and then going down, large expansion, severe reaction, no bullish or bearish fairly gap forming within here, so there's a clear consolidation. Still price rejected from the equal high or whatsoever, call it maybe the Asia high, and then continue going lower into the DT broke zone. I know there's a lot of lines here, it's not that clear to us, but bear with me. These are here, just marking from this area, the 4-hour and 1 hour. Yep, that's the zone, and then that's the next zone we're looking at in terms of 1 hour. Because we body break there, it's a sign to tell us that price likely to disrespect this low in time. Okay, it's so much easier to look at price when it all happened, but it's not that easy when we were trading it, because we can see, okay, we have a 1 hour rejection, but it didn't form Bessel City in consolidation, so price may likely to challenge at levels, but we failed to break the protected highs in these areas. Say for example this is all block, okay, we failed to break that by body, or even if we sweep it, that's fine, but if we don't body break over, we don't have a change in character. Okay, now we're going to go into my intraday price action because there's not much list, etc. because it's not important really. So like I said, I use a time model to tell price. So time model from Asia, we got this price action from here, and this is 6 o'clock. This here, sorry, excuse me. This is Asia. We broadly broke it low. We're starting to look like we're doing Judas swing. So whoever was entering on 5 minute, that's good because you finally have a retracement entry. And I already explained about this video about how we look at price, and you can see some of the live trades I've taken and seen a demo live because they're just waiting on opportunities. I've done my trades already. I don't really need to hold or even carry the idea because like I was thinking about holding when I saw the other days for my supply and demand zone on 1 hour, but unfortunately 1 hour only delivered to the structural range low, which price now manipulated to go high. So then I was like, nah. If I trade from 1 minute zone, okay, I deliver to 1 hour zone, that's good enough already. That's pretty hard because like 1 minute cannot deliver to 4 hours zone. I mean, it can sometimes, but very, very rarely. And price will do a lot of random things, and I don't want to take partial, so what's the point, right? Anyway, going from here, I know I said I can look for 10 pips here, but that's just what I was looking for, supply and demand, and just quickly trade out there. There was no sign of body breaking just yet. We only have signs of body breaking until here. The price retraced to hit the supply zone, but it did do, demand zone, and it did do the liquidity graph. This here's a 5 minute zone in consideration of what happened on the left hand side. So here I marked this 7 trades of 2 hour, 3 longs or 3 shorts, whichever the way it was. And then there's a lot more entries from 15 minutes and 5 minutes and even 1 hour to trade from. So if I were to look for trend trades here, yes, I mean, it's great that when price is trending higher, it actually does a lot of little retracement instead of one big impulsive move. So we get a lot of entry opportunities here. Monday is a really, really fun day, I suppose. So indirectly, if I'm entering my trades, just limit orders, I think I can possibly get like a bit or less of like 100R. But what's the point? Trading is consistent. It's not about greed, etc. Because like me trading for a while now, how many times did I get screwed up by greed and emotions? I don't want to, like now I have this thing, like even if I lose something, I can always get it back later the next day. I mean, sometimes I can hold on, like say for example, if I know this is right, and I know I can catch the other reversal trade, I know where the draw on liquidity is. If I lose a trade, I can catch a trade to win, something like that. Or not like revenge trading, there's no point. And also per setup, you should only enter 1 or twice, but ideally diverse your risk, so you can take a point for partials if you want to. Now, in terms of Friday, price kind of hit a significant point of high time frame swing low, so we can perhaps looking for opportunity to go high to retrace, but I don't think we're going to break structure on high time frame, like at least 1 hour high will still be kept. Anyway, go from this. So we only broke this Asia low a lot later. Say at this point, we formed a little bit equal low, which is a bit of an enticement, but equal low at a time model doesn't make sense. Sometimes if we correction the price, Asia high does hit, because I remember this day on Wednesday it hit kind of like equal high, or even say Thursday we hit an equal high, and that was a bit challenging to gauge what price was doing, but it was respecting higher time frame supply zone. So in this regard, we can look at price. There's no one important move. There's a lot of smaller Marubozu candle and retracement candles here, but yeah, ultimately it's liquidity, and then going to hit mal retracement, not really indicating anything significant. Then go to here, 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 into PY again. This here's a pivot gap here, mitigations. See, pivot gap, not really reacting to old block, but could be full supply. So what I did here is okay, look for the reversal and look for the break, because I see it broke Asia. Very big Nagasaki, very big. Yeah. So what happened here was we don't really have a supply zone, but in terms of marking the fear and surprise, this here's a maniness, the manipulation they consecutive bearish candle went into that level perfect. That's not how I mark the zone, but that's just how I mark the fairness of consecutive candles without any particular retracement to mitigate that 50% initially. So that is a particular zone if you want to look at it, but that's not how I use my zone. Because if you don't enter off here, there's no real supply zone. Your confirmation of supply zone is more here. And then like I said, you look to your left when there's a higher time from the left. But this here wasn't a higher time from the left. We just showed you here very briefly. For example, there's a higher time from the left, we failed to break that high. And then this little overblock, you see, we failed to break any significant candle highs. And firstly, so this particular breaker structure is the original breaker structure. So usually any kind of price action, you're looking at the original price, breaker structure, the first breaker structure usually carries a lot of significance. All of these QIs, how do I know which ones was more important to trade? Well, supply and demand, which is not mitigated, what is not mitigated or not, and then looking at the correlation with the other time frame, 5 minutes, 15 minutes, and just make my trades off there. And so basically it was a counter trend trade, seeing this high wasn't taken, but of course, if this here is like a first tap, according to stock trader, you do a first step trade, but this here isn't the first step because it's looking at direct structure mitigation or direct structure ranges. This here is more like a long term and price trades, but like it's a high time frame move basically. Don't trade this if you don't have high time frame. Well, yeah. So this here, consolidation, break that, and then POI there. On FX here, it's a bit of a sweep, so it's a liquidity grab. But because I ascertained that my high, this high is a protected high, so it was just covered already. On Tuesday, I was implementing my strategy as per normal, but I wasn't feeling as confident as I would trade this because of the second week, and also I don't know if this is exactly how it's going to go. However, to me, it's a mechanical system. To me, this here is something that can be automated in terms of indicator, etc., because it still has this level of discretion of where you want to put your stop loss or which entry price. Because for my system, this one here, I mark the zone, but there are 3 criteria or 3 entry points that I can make, and it just determines what kind of aggressive trader you are or I am, etc. Yeah, so in this case, counter trend short, long. Then this here was clear liquidity, sitting here, clear liquidity. So personally, I think I entered 2 trades here. One was off the 5 minutes because this level was established to be the 5-minute high. Right, later on, sorry, I should turn this off. Yep, so enter all block and then cover my high to protect the high, etc. All block was violated afterwards, or liquidity grab constantly. Yeah, I mean, this whole week is every single week that gives you different price action. There are weeks there where I have entered at quite a bit of non-extortional price, POI is just equal high, etc. Then today, this coming trade session, I mean, this whole week I only saw one non-equal high. Non-extortional price equal high or equal. Yep. Anyway, so with price going down, liquidity grab plummet lower. This is off a 15-minute entry area. So what is the target? Target to a particular zone. It enters a new zone, high time frame, but it failed to break that high, as we can see. Instead, we form an equal high. A lot of liquidity works, so it's definitely liquidity to push. But unfortunately, Wednesday formed another equal high, or like very near that point, without really taking it, because we can see all this liquidity. Yep, roughly. We didn't really hit equal high, but we rejected from that level. And who knew, right? I didn't know. I probably wouldn't be as confident to trade this until I see more supply zones holding on and one on its own. Yeah, so there's a lot of trades here. I think it's about 3 or 4 trades that can be placed, but they only happened a lot later. And this here doesn't have any more confluence because it's so packed. I'm concerned that this won't hold. I mean, to be honest, looking on the price on the left hand side, it's just the same price pattern like that. It's very packed, and this here is always packed. So all these returns are just reaction to supply and demand that's unmitigated, but they failed to break each high. So yeah, so this here is a 5 minute zone, giving a bit more confluence to trade towards a pretty safe low. Retracement, disconnection, overflow. I still trade the idea because we have the order block here. I did my standard entry, and then see order block mitigation, extreme order block mitigation, and then I just trade off there. However, uh, I don't actually know exactly what happened. I think it's more like there was a 15-minute city that were respected by 50%. That's the only comment I can make. So unfortunately, there's a loss because, to be honest, the price really did hit about 5.2 pips, which I can move to break even. But I just wasn't comfortable to move to break even, you know. But she just moved to, according to my trade management rules. Later on, so I got value here, price retrace to another supply zone, look to enter. Mm, yeah, so there's just not much price action to really go into here. I did a demo to try long because it hit a zone of interest, but the zone was proven ineffective, so there's actually no new zones after that. And then later on, this price action retraced all the way up to a particular zone and went up to as high as the 1 hour zone. But then this place, yeah, so I'm going to get out of my room as quickly as possible because me and my roommate's going to get some Maccas. So thank God. And then see here I missed out because I wasn't awake until here. Then Asia 8 o'clock, there's a little bit of news and then price create equal high, etc. And then plummet last week, protected high spot zone held, and then there's constant liquidity grab, but just trade according to supply and demand and just towards this area. I was kind of expecting price may hold here, but I wasn't really thinking that price would sweep all this because it was a new zone of interest. So yeah, but later on, this actually went into the other zone of zones that I was interested in, and I missed the entry. The entry was a lot higher, but look, this is a 5 minute entry. I'm not. Yep. So with this price action here, we obviously took Asia. We have a protected high. This here T-Forex actually relates. For example, the bullish zones, like the 30%, 50%, 70%, actually correlates to form the zones on bearish price action, which is very, very interesting. So that's something that you guys should definitely check out. So this here was a protected high on 1 hour. Amazing. Because this here actually happens to be a zone on like a bullish zone, one of the 30%, 50%, 70%, etc. So this is something that's pretty cool at the same time. You can reverse the zones for like a protected high, protected low measure. Right. Anyway, so that zone wasn't violated. So this here is a quick entry to scalp. Target to this area because these were all snapped. And then this disconnection overflow, the 5 minute busy, there's no busy reaction. There's only one busy reaction sitting here. There's a bit of 15 minutes busy sitting here as well, but price doesn't reach this place. I mean, looking at lower time frame, this here is mitigation. This here is mitigation. That is not an order block respect because the order block's sitting down here in terms of when I'm looking 15 seconds. These are all mitigated already. So if you want to do some expansion, this is what we talked about in terms of approaching. And then momentum of price as well. So from this low to the high, it took the span of 2 hours and 4 minutes. Then going from here, it took about 1 hour and 20 minutes. Amazing that. So why the price retrace? Because we hit a daily swing point. So this is all clear in terms of price action. We can look to retrace if being surprised. And looking at this price point, hardly any swing highs been taken in terms of significant structural high. So all of these are bearish price action, just quick run down, manipulation down. That simple. But annoyingly, that's just what happens. Then again, this price action here, a little bit equal low, correction of the price, could be a non-exhaustion of price POI, and then just retracing higher. If you ask me, is there a particular trade? Yeah, some trade idea here, like all the blocks in there, mitigations and pumping higher. I think price needs to challenge to some kind of supply and demand because every single trade you're looking at is just a particular entry point of a zone that I do. Alright? So hopefully that gives this guy some insight. But yeah, like these were all just major target towards a particular point. Like for example, this here was a time one, like it's like below this one, look target here. There's no real reason to pump higher because there's just no significant higher time frame for it to go higher from. Yep, I hope you guys enjoyed this video. If you don't, let me know. I'll go from there. I'll catch you guys another time.